All right, folks, the tech sector has been thrilling this year, coming in better than expected. Many are saying we're in a housing meltdown.
Yes, you're right. We're in a housing meltdown. I think we're going to have, we have home affordability levels at the lowest rate, and the housing market, U.S. housing market, bottoms in the March quarter. If that's right, and you start getting a recovery in home sales, existing home sales, I think Zillow is a great way to play that recovery. You can do it other ways. You can buy home builder stocks, etc.
Hey everybody, it's Robert here. So today I have a very interesting topic that you're probably hearing over the news. It's Zillow. I'm going to examine Zillow's 1% loan program. And is this a fix for the housing market? Or is this just another gimmicks from the big companies just to push you to buy something in which a program that it has more risk than a reward? So let's gonna go right in right now to look at, and I'm gonna be crunching the numbers, uncovering the truth. Can this 1% program really help us solve the housing crisis market? Let's go in. So thank you everybody for coming here. So today we're going to be looking at this Zillow program that just made it out on the news. And if you just Google Zillow 1% program, then you will really see what is going on in the real estate market. So I'm going to share here my tab, and it's going to see it's all these different things that talk about the Zillow 1% programs. I said, like, there's all these media outlets that are showing you what's going on with this program. So let's read this market from Markets Insider websites. Zillow, it's offering prospective home buyers the option to put a 1% down payment on a home purchase amid an ongoing affordability crisis sparked by soaring mortgage rates. Okay, let's stop right there. That is true. We have an issue with affordability. Home prices are very unaffordable at this point. Interest rates have more than doubled in the last 18 months. And, you know, if you want to add a little bit more salt and pepper on top, you have inflation. So that's really making a lot of buyers with decent income, but not a lot of savings, feel the suffocation. Yes, exactly. That's how they're feeling. So the idea is, if you can afford to pay a high rental fee on a monthly basis, maybe you should probably be able to qualify and buy a house. But we're going to go deeper into this. The 1% down payment program from Zillow Home Loans is designed to reduce the time needed for consumers to save money for a down payment. For now, it's only offered to eligible borrowers in Arizona. Through the company intends to expand the program to other states. So they're testing this program in an area where homes are still considered somehow more affordable compared to like New York or Miami, Los Angeles. Arizona has probably a more of affordable options for families. An analysis by Zillow Home Loans shows that by reducing the down payment burden to 1% of the purchase price, a home buyer looking to purchase a $275,000 home in Phoenix, I'm going to speak for Gaithersburg, Maryland, that is probably not going to be the case. Around here, you're probably looking more about $400,000 to $450,000 for a decent townhome. Single family homes, you're probably going to be looking over $500,000 right now. Who makes 80% of their area's median income and saves 5% of their income will only need 11 months to save for the down payment, Zillow said. Well, that's in the perfect scenario. Remember, most people also have car payments, credit card payments, student loans. So the time for saving is not necessarily 11 months. By comparison, a similar home buyer saving for a 3% down payment will require 31 months to reach their saving goals. That probably makes more sense. Home buyers typically aim for a 20% down payment on a house to avoid the need to pay for a private mortgage insurance, but plenty of consumers also opt to put a down payment of between 5% and 20%. So traditionally speaking, loans have been made to put a substantial amount of money where the lender feels that you're also taking part of the risk. It's not all on them. So conventional loans are in different flavors, 3%, 5%. FHA loan minimum required down payment is 3.5%. And then if you have like a VA, like a veteran type of loan, you can do as little as a 0 down payment, and you can go to 1, 2, 3, 4, 5, but you have to qualify for that, okay? This is where Zillow wants to sweeten the deal for everybody. Zillow said it will contribute an additional 2% to the down payment at closing for qualified borrowers. It's not a payment to the borrower. So now you see they're going back to the traditional 3% down payment. What's happening is the buyer is only risking 1%. Zillow is fronting the cost of the 2%. But you can say, wait a minute, Zillow's so generous of you to do that. Well, not necessarily. I'm sure there is a catch. But the 1% down payment option doesn't solve the housing affordability crisis. True, a smaller down payment leads to bigger monthly mortgage payments because borrowers have to take on more debt. Exactly. Lower down payments means higher fees, higher interest rate, more risk. That's exactly what the lenders are going to say. You can ask any lender in the world or in the United States, and they'll tell you the less of a down payment you put, the more risk it is. So you will have to pay higher interest rates and more fees, like private mortgage insurance. And as long as interest rates stay high while home prices remain elevated, the affordability picture will not improve. The average 30-year fixed mortgage rate is now above 7%, which has tacked on an extra $1,000 monthly mortgage payments for the median U.S. homes that sells for $416,000 compared to more last year mortgages rates of about 4%. Zillow's new down payment option comes as the company is expanding to be more than a platform to browse homes for sale. So here's the catch, right? So Zillow used to make money selling advertising to real estate agents. Real estate agents figured out that these leads are not necessarily good because let's be honest, if you Google homes for sale in Gaithersburg, Maryland, okay, and let's just really do it right here for now, just for the sake of showing everybody how this whole process starts. So I'm going to say Gaithersburg, Maryland. Okay, so then you start seeing different options of homes that are for sale. And as you can see, the inventory is still not what it needs to be, but you start looking at this, and then let's say, you pick a house just like this. I think this is a condo in the Kenland. By the way, if you want to look at one of the tours that I have in the Kenlands in Maryland, you want to check this video. So here's your property, $509,000, has this estimate, that has the square footage, and it says, the potential monthly payment of this. So here's where you have to be playing with the down payment amount. So in this case, you have to put 1% down payment. Okay, so let's say credit score, I want to use something between 660 and 719. Okay, so we'll see what happens. So you see now all of a sudden your monthly payment jumped to $5,060,000 from like $3,000 and something that we just had a minute ago. Principal of interest, property taxes, home insurance, mortgage insurance. Look at how high the mortgage insurance is, and so more. So let's just change this. Okay, so now we're going to do a 3%. Okay, so you see from 5,000 and some change to 15,000. So now do the save and calculate. You see now it's a 4,984. Again, it didn't go down by much, but you see your fees still stay kind of high. Let's do 5%. Okay, 4,800. Okay, let's do 10%. See how big now it really right now. So initially, if you remember, it says to save 3%, it will take about 31 months. So to save 10%, probably it's going to take, 60 something months or 70 something months. You still see that you are not able to bring down your thing, and this is a condo, so you have to add the condo fee on top of that. So we're now going to get to 20%. Okay, $101,000. You see, your monthly payment is very, very high. So which really leads to say, are they really solving this problem or are they not? So going back to Zillow, as I said, they were selling advertising to realtors. Market kind of dry. Realtors cannot afford to sell advertising, so they have to find another way to make money. How are they going to make money? To sell loans, right? That's the only other option they have, but not any kind of loans. They have to now sell loans that are more of type of loan that, it's going to make it appealing for people that needs this type of program. Okay, so now I'm going to be playing with something that I think it's important to take a look. So I went here and found this website, better.com, that has an option to compare loans. And this is price point is $400,000. This one, it's putting 1% down. This is putting 3% down. Interest rates, of course, the lower the down payment, the higher the interest rate is going to be. I'm using 8.25 on this 1% option. and I'm using 8% on this 3% option. There are some points that probably will be charged for doing the loan. Most loans have points. So this is about 5,800 points. This is about $2,900 in points that you have to pay up front. So the term is 30 years. It's a fixed loan. So you see the points. You see now your monthly payment is $975, $847. Lifetime cost of this loan, it's $1,076,000 versus $1,027,000. So, you know, it's definitely going to cost you a lot more to have these type of loans. And so the question now is this really solving the housing market? I am of the opinion that it's not necessarily going to solve the affordability because its prices have now come down. This is only just to make a creative way to help people come and find ways to buy a house. That's all I think it is. There's really no other stuff here. That this is my professional opinion as a real estate agent. So now you really understand what Zillow is trying to do. Very creative way of trying to put something together to make it look things can be a little bit more affordable, but in reality can potentially cost you more because of the fees that are not associated with it. Like always, the big headline is we are helping people, but reality is, are you really helping people, or are you just covering up something that is always been out there, renaming it, giving it a whole different thing, putting people in programs that probably they don't understand and have no way to know if it's the best thing for them or not, and then just go for that. So thinking about you potential home buyer out there, whether you own a house, don't own a house, used to have a property, is to really look at the best options that you have, and if it's really worth it to wait a little bit more to save for that money, then you should probably do it. Now, if you are here like in Montgomery County, Maryland, and Washington, D.C., and Northern Virginia, there are some other programs that you probably want to explore before you can commit to the Zillow 1% down payment that in reality is more like a 3% because Zillow is giving you a 2%. So enough said of that. So if you guys are thinking about making a move here to the Washington, D.C. metro area, feel free to schedule a consultation with me here at no charge. We'll talk about that, and you will receive my free relocation guide upon setting up a consultation with me. I get messages from people all over the place, so feel free to reach out to me. It doesn't matter if you're thinking about making the move to this area in the next 5 weeks, 5 months, or even a year. I'd be more than happy to sit down with you, do a video consultation, go over the process to explain you the pros and cons of living in either in Maryland, DC, or Virginia if you really wanted to relocate to Montgomery County. Thank you very much, everybody. Bye-bye.